So in response to my video about ConocoPhillips cutting 25% of its workforce, this person wants to know if OPEC smells blood in the water. Yes, they absolutely do. And they're openly saying they're doing this to take back their market share. They're saying out loud, we're trying to knock you down a notch. Someone else had mentioned record oil production in the United States, because for the month of June, we hit record oil production. Now, initially, they said we hit record oil production in May, but then later they revised some number from October of 24, which showed October 24 was record oil production. The point is, all of these production numbers currently are so tight, they're right along riding the margin of record or not a record, that it doesn't make a huge difference that it's just in fact a record, because it's not a lot more oil production. In addition to that, oil production in the United States is somewhat seasonal. In the winter months, oil production is always lower. It's always higher in the summer months going into fall, because September 30th is the last day of the fiscal year. And when you get into the late summer months, that's when oil companies have spent all of their capex for the year. So you start seeing their investments being realized with higher oil production numbers. So we know they've drastically reduced their capital expenditures for next year. And the only thing really maintaining oil production in the United States right now is the price hasn't fallen enough to reduce the amount of marginal wells that are producing oil. Marginal wells, or wells that produce 15 or less barrels of oil a day in the United States, 77% of all oil wells in the United States are marginal. And with rising electricity costs and with rising natural gas cost, the cost to keep those wells operating is increasing. So if the price of oil falls to where the EIA, the IEA, McKinsey Wood, S&P Global, where everyone says it's going to fall to like $50, that's going to make a ton of those wells unprofitable and uneconomic, and they're going to be shut in. And that's when you're really going to start seeing production losses in the United States. Also keep in mind that from the time you lose rigs to the time you lose production, there's several months lag there. And that's because there's always a backlog of wells waiting to be completed that have already been drilled. So if oil prices fall to where everyone thinks they will, we're definitely going to see pretty significant production losses in the United States. But even if we don't, Saudi Arabia and OPEC is still gaining market share because demand is still rising. And if our production is not rising with demand, there's extra market share there, kind of like arbitrage, and they're getting it all. Some people think demand is going to rise so much that it's not going to impact oil prices. And that's absolutely possible. Keep in mind, predicting oil markets is the hardest thing in the world. But at the end of the day, everything is predicated on oil prices. Thanks.